this definition, each term has a meaning. Accounting is a function. We call it accounting is a function which provides financial information, to various parties. For what? To take economic decisions. It's a function which provides financial information to various parties to take economic decisions. Decisions of a business. So already we discussed what is meant by business. By collecting, recording, classifying, summarizing, and interpreting. So this is the process of accounting. The financial transactions occurred in an accounting entity. So this is the complete definition, right? So let's see one by one. So first it says accounting is a function. So what is meant by a function? Function means it has an input. A function has an input, and also there is a process and output. Function has an input, a process, and an output. Right? So what are the input of accounting? Input. So when it comes to input, the input of accounting is transactions and event. That's the input. Transactions and events. And the process is collecting, recording, classifying, summarizing, and interpreting. This is the accounting process, right? And the output of accounting is the financial statements. That's the output. Input, process, and output. So let's see what are the inputs. We call it transactions and events. Right? Accounting input has transactions and events. So first let's see what is meant by a transaction and what is an event and what's the difference. Okay. So first let's learn what is meant by a transaction. Transaction has three features. Transactions has three features. There are two parties involved in a transaction, and there is something measurable in monetary terms. Measurable in monetary terms, and there is a transfer of resources or a service. It's a transfer. Let's say we have a person, we have the owner of the business. He is the owner of the business. He goes to the bank and he takes a loan. He takes 100,000 worth of loan. 100,000 loan. The owner takes 100,000 loan from the bank, right? Obtaining a bank loan. Now see, this is a transaction. Obtaining a loan. It's a transaction, right? So there are two parties involved: the owner and the bank. And there is something measurable in monetary terms. Rupees is measurable. And transfer of resources. Cash has been given to the owner and it creates a liability or an obligation to repay that loan. Right? So that is why we say transaction take place when an exchange that is measurable in monetary terms is made between two parties. So when you define, you have to mention these three key terms in the transaction. Right? Then what is an event? Now in accounting, we are not only recording transactions, we are recording events. So what is an event? Event. In event, there is no exchange. No exchange. For an example, due to a fire, due to a fire, all our stocks are getting destroyed. Due to a fire, all our stocks are getting destroyed. So it is an event. There is no two parties involved. Right? There is no two parties involved, and there is no exchange. But we have to record this transaction. So event means where an exchange does not take place between two parties, but there is a change in the assets, liabilities, or equity. And the change affects in monetary terms. We call it is an event. Right? And depreciation is another type of event. Depreciation. Okay. Right. So we were discussing this. Just go through the mind map. Accounting is a function. So I was explaining what is meant by a function. There is an input, process, and output. So input, transactions, and event. Then it says which provides financial information. The accounting function provides financial information. So what is meant by financial information? Just go through with information. So we know what is meant by information. Information means it's processed data which is used for decision making, right? If you want to make any decision, you use information, right? So information can be divided into two: qualitative information and quantitative information. Qualitative means you can't present in numbers, no numbers. For an example, if our manager is a skillful person or the cashier is trustworthy, these are informations. But in accounting, we don't take qualitative information. In accounting, we don't take qualitative information. We will take quantitative information which could be presented in numbers. We should be able to present in numbers, right? But we don't take all the quantitative information, because some numbers, let's example, the owner is 60 years old. The manager's experience is 10 years. Right? So we don't take this type of information. These are called non-financial. There is no rupees and cents. There is no rupee value. We take only financial information. Financial information has the rupees and cents presented in monetary terms, money. Right? So that is why we say accounting provides financial information. Accounting provides financial information. Okay. To whom? Accounting is a function which provides financial information to different type of people, various parties. So we call them stakeholders. Various parties means stakeholders. So the stakeholders are divided internal stakeholders and external stakeholders. So let's see who are these stakeholders. Right. Stakeholders. The internal means within the business. Within the business. Right. So within the business we have the owners, the management, the directors and management, and the employees. These stakeholders are called internal stakeholders. Internal stakeholders, right? And there are external stakeholders outside the business. Government institutions, customers, suppliers, creditors means the suppliers, the banks and financial institutions, media. So like internal stakeholders, external stakeholders, internal and external stakeholders. So accounting will provide information to all these stakeholders, right? For what? To take economic decisions. Providing this information, providing this financial information for the stakeholders to take economic decision. So what is meant by economic decision? Each term has a very important meaning. Economic decision means if you take the owner, he has limited resources, right? He has a limited land, limited labor, capital, entrepreneurship skills, all limited, right? So we call it, there is a limited resources, there are limited resources for all these stakeholders, but their wants are unlimited, unlimited wants, unlimited wants. So due to limited resources and unlimited wants, the owner can't do everything. Let's say the owner has 100,000 rupees. The owner has 100,000 rupees. So he is planning to invest in different options. He has many options, right? He can deposit in the bank. He can deposit in the Colombo Stock Exchange, right? He can deposit or he can invest in debentures or any other company, right? So there are many options. Or he can invest in a business, right? So from all these options, since he can't satisfy, he can't do everything, he will select only one. Let's say he is selecting investing in the business. So he will select the best option. Select the best option. Then all the other options he need to sacrifice. All the other options he need to sacrifice. So this concept is called the economic decision. And since the stakeholders can't satisfy all their wants, they sacrifice and they select the best option. They select the best option and sacrifice everything else, right? So this is relevant not only for the owner, for everyone, all the stakeholders. Like for an example, let's say the owners, the employees. If you take the employees of the business, right, they see the financial statement. They see what is the salary, how much salary they are getting, what is the bonus or incentive that they are getting. So based on that, they will make the decision to stay in the business or to leave from this business. They will make the decision of staying in the business or to leave the business, right? So they see the stability of the employment, or whether they can increase their business, their wages or salaries, right? Let's say the customers. Customers look for the quality goods provided at reasonable price. So they need the financial information to see whether the prices are reasonable. Right? Lenders or the creditors, suppliers, they will see whether they can recover the money that they have lent to the business. Right? And they will see whether they can provide further loans, further credit. So all these stakeholders will make economic decisions. So that's the importance of learning economic decision. Right? So accounting, let's go back to the mind map. Accounting is a function which provides financial information to various parties to take economic decisions. I was explaining the economic decision. Limited resources, and unlimited wants of the business. So not anything else. All these things will be done in a business. So business means any economic activity which provides goods and services to satisfy human needs and wants. So we discuss all these function of accounting into a business. And how does this happen? How does this work? By collecting, recording, classifying, summarizing, and interpreting. Right? So let's see this process. This is called the accounting process. Accounting process. So let's see the accounting process. Right. So we discussed the transactions and events, which is the input of accounting. Input of accounting is the transactions and events. The first step in a business is collecting the source documents. The first step in a business is collecting the source documents. Right? What are these source documents? For example, let's say this is your father and this is you. He is giving you 5,000 rupees. He's giving you 5,000 rupees to purchase a shirt. Right? He's telling, okay, you go and buy this from a good reputed place with a good brand. Then what happens? You are not going to the branded place, you go to Beta and you buy a shirt for 500 rupees. You buy the shirt for 500 rupees and you tell that to your father, okay, but I bought the shirt for 5,000. Now he's having a doubt. How does he check whether the price is 5,000 or 500? 5,000 or 500? He will ask for any invoice. You will ask, give me a bill. There is the bill, right? So you have to provide the bill. So this is called the source document. It is the evidence. It is the evidence for a transaction. It's the evidence for a transaction. Right? So in accounting, it is must to have the source document for all the transactions. It's must to have the source documents for all the transactions. Right? So once you collect these documents, the bills, vouchers, invoices, debit notes, credit notes. So once you collect all these documents, as the second step, we record them in set of prime entry books. We record them in prime entry books. So mainly we learn 7 important prime entry books, 7 books: cash book, petty cash book, the sales, purchases, return inward and return outward day books, and the general journal. In the third step, we classify them in ledger accounts, T accounts, using the double entry principle. So there are there are 5 types of ledger accounts: assets, liabilities, capital, income, and expenses. So using the double entry principle, we post the transactions in the ledger accounts. So once it is classified into different types of accounts, fourth step, we summarize and prepare a trial balance. Summarize and we prepare a trial balance. There it is a summary of all these accounts. Finally, we interpret using the financial statement. We show how much is the profit in the business. How much is profit of this business? What is the financial position? Whether they can settle their liabilities, what is their asset, right? So this is the accounting process. So your entire accounting syllabus, accounting part covers this process. In the syllabus, we will be covering this process. Okay, now let's go back to the definition. So I was explaining the function which provides financial information to various parties to make economic decisions of a business by collecting, recording, classifying, summarizing, and interpreting the financial transactions. So already we discussed what is transaction and what is financial. Occurred in accounting entity. Occurred in an accounting entity. What is accounting entity? It can be a sole trader, it can be a partnership, a company, right? It can be a non-profit organization, government organization. So any organization which is separated from the owner is called accounting entity. Let's see the definition. What definition says: accounting entity is considered separate and distinct from its owners. So that's the basic in accounting. Owner and the business is considered as two different parts. We call it accounting entity concept, business entity concept, separate. So that's the definition of accounting, right? That's the definition of accounting. So each term in this definition has a very deep meaning. Each term in this definition has a very deep meaning. Right? So you need to understand that the different meanings and the importance of these terms. Right. So let's move on to the next part, objectives. What is the objective of accounting? The main objective, which was given in the definition itself, providing financial information to stakeholders to take economic decisions. So the main objective of accounting is to providing information, providing financial information to the users, stakeholders, right? Other than that, there are some other objectives as well, general objectives. Keeping a systematic record, calculating the profit, results of the operation means the profit, and showing the financial position, right? This is preparing income statement, this is preparing statement of financial position, and showing the liquidity. Liquidity means ability to pay the debt, loans, ability to pay debt, right? And also, if you have a proper accounting system, you can protect your assets, protect your properties, because everything will be recorded. If you don't have records, we don't know if someone takes out our asset. If you don't have a record, it's very difficult to track. But when you have a proper system, you can protect your properties. And it also facilitate rational decision making. Right? We can make economic decisions, which is good, which is the best decisions that we are going to make. And also, it satisfies the requirement of law, especially the Inland Revenue Department on tax, okay? And also company registrar of companies, and Colombo Stock Exchange, if it is a listed company, and satisfy the requirement of law. So those are the objectives of accounting. Right. Then moving to the next slide, we have two types of accounting: financial accounting and management accounting. Right? So let me explain what is meant by financial accounting and what is meant by management accounting. Now, in your syllabus, we mainly target on financial accounting. If you are further studying for the A levels, right? In A level, now the definition which I was explaining is about the financial accounting. It's about the financial accounting. Right? Information, we provide historical information, what is past. In financial accounting, we provide the past information, but in management accounting, we provide historical plus budgeted future information. And the users are internal and external both in financial accounting. It is mainly used by external parties. External parties are the stakeholders. So financial accounting is used by stakeholders, but management accounting is only internal. Internal means the management and the owners. internal users only, right? And period. Financial accounting reports you may have seen in your questions. It's especially for 1 year. For the year ending for 1 day, it can be for 99 years. 99 years. All these government projects, like we know, the Colombo port city, port city, or the highways, right? Highway projects. So most of the land, most of our lands are given on 99-year lease to the to China. So the project proposal, they have to prepare the budget for 99 years. So it's about management accounting, forecasting the future, right? And in financial accounting, we have to follow all the accounting concepts, rules, regulations, right? Systems, formats we need to follow. But in management accounting, there is no requirement to follow the accounting concepts, rules, regulations. It is depending on the company. Okay. So accounting, right. Okay, I'll go through again. There is a question to just explain again. Let me explain from this. Financial accounting records the past transactions, preparation of information about the past transactions of an entity in a manner that will enable external person to make economic decisions. So here, especially using the past transaction, we provide income statement and statement of financial position. Financial accounting. That's the main objective of financial accounting. Management accounting means it is for the management to plan, control, and make decisions. Right? Mainly forecast and budget. What is future? So that's what we do in management accounting. Financial accounting is past, management accounting is future. Remember that. Simply remember this is past and this is future. Then we'll move on to the next, accounting environment. So this is similar to the business environment. And if you didn't join for the previous chapter, it is in factors are affecting the businesses. Now here we see how these variables, how these factors are affecting the business, the accounting. For an example, we have economic factors. Economic factors means the exchange rate, the taxation policy, the interest rate. So let me take one example. When the interest rate changes, if the interest rate, bank interest rate, let's say it's 10, it was 10%, it changed for 15%. How does this affect the accounting? Your interest expense will increase. Your expense will increase, right? Whatever the loans that you have, you might settle because you have a high interest cost. If it decreases, then you might take more loans because your interest expense is less. Okay, likewise, each variable, each environmental factor affects the accounting. Each environmental factor is affecting the accounting in a business. So we don't need much in-depth knowledge of this, just have a brief understanding of uh, accounting environment. Right. And this is another main part, accounting elements. We have many questions from accounting elements. Okay.
ಇಲ್ಲಿಂದ ನಾಳೆಗೆ ಅಂತ
There are 5 elements. There are 5 accounting elements: assets, liabilities, capital, income, and expenses. So we need to understand. Remember, this is very important, very important concept. Right? Your entire accounting syllabus is based on this. So next 10 minutes, 15 minutes, try to get the clear picture about this. And I'll brief you on the entire system, entire part in this accounting elements. Right? Right. So one by one, let me explain. Asset. Assets are, we call it present economic resource controlled by the entity as a result of past event. So in the definition, it says it is an economic resource. Economic. That means this asset has a right to produce economic benefits. For example, we have a building. Building is an asset. So from this building, you can produce economic benefits. Either you can rent it out or use the building to earn money. Right? You can have your office, you can have your showroom, or you can have the production plant. So that can produce economic benefits. If you have a vehicle, from the vehicle you can produce economic benefits. Or if you have the stock, inventory, you can sell this and you can produce economic benefit. Right? So all these assets can be divided into 2 types: non-current assets and current assets. Non-current assets and current assets. Non-current assets means the assets which we can use for more than 1 year. More than 1 year. Current asset means less than 1 year. Assets which can be used for less than 1 year. Right? So simply remember, assets are present economic resources controlled by the entity as a result of past events. Then we have liabilities. What is a liability? It is called a present obligation. Now let's say a bank loan. This is an obligation where you cannot avoid, no practical ability to avoid. If you take the loan, you have to settle that. If you purchase on credit from the suppliers, you have to pay to the creditor. You can't avoid. So that is why we call it's a present obligation of an entity to transfer the economic resources as a result of past event. Now, to settle the bank loan, you have to pay cash. To settle the bank loan, you have to pay cash. Right? So your economic resource will reduce. And the liabilities also we divide non-current liabilities and current liabilities. Right? More than 1 year and less than 1 year. Right? Later I will further explain this. Right? For example. Right. Next, the equity. Equity means the proportion of assets owned by the owners. How much belongs to the owners of the business? It's simple. Let's say we have total assets 100,000. Out of this, the bank loan is, let's say, 70,000, and remaining 30,000 owned by the owner, right? So how do you calculate the owner's asset or owner's bill? How much belongs to the owner, which is called capital? So capital is equals, capital means the equity. Equity is equal to total asset minus total liabilities. So you will get how much belongs to the owner. From 100,000 minus 70,000, then you get 30,000. Okay. So that is called capital. Then we have expenses. Expenses are decrease in economic benefits. That's all. Right? Economic resources economic benefits are decreasing. Now salary, when the business pays salary, the cash will reduce. Cash will reduce. When they pay the electricity, the cash will reduce. So it is decrease in economic benefits. And the income means increase in economic benefits. Decrease in economic benefits and increase in economic benefits. So let's see what are the income and what are the expenses. This is a key area that you all need to understand, because this is useful when it comes to preparation of financial statement. That is the main question in your syllabus, in your paper. Right? So when it comes to income, as I said, income is increasing in economic benefits. Increase in economic benefits. Right? So there are two types of income: the main income and all other income. So main income of a business is sales, and the main expense of the business is cost of sales. Main income of a business is sales, main expense is cost of sales. So if you take the sales, we need to calculate the net sales. That is from the sales. Let's say you sell 100,000 worth of goods, and if there is any return, that should be deducted. So in income, when you are taking the income, we take the net income, sales minus return inwards, sales minus return inwards. And cost of sales. So this is also a very important part. Cost of sales. At the beginning, we had 20 liters. At the beginning, we had 20 liters. Right? That's the opening stock. Opening stock is 20 liters. And we purchase another 40 liters. This is opening stock. At the beginning, we had 20 liters and we purchased 40 liters. Now, what is the total amount we have? 40 plus 20. Then, let's say at the end, we have only 10 liters remaining. 10 liters at the end. closing stock. Now, if I ask a question, how much did we sell? How much is sold? We had 20 and we added another 40. So total we had 60. And if the remaining is 10, we have sold 50. So if we put this into an equation, opening stock plus purchases minus closing stock. That is how we calculate the cost of sales that gives you how much we sold. Opening stock plus purchases minus closing stock. And in between, if you have any return outwards from the purchases, that should be deducted. Let's say from 40,000 per 40 liters purchase, 5 liters you return. So that should be deducted and you need to get the net purchases. Right? So the main income of a business is sales. Main expense of a business is cost of sales. Right? By comparing these two, we calculate the gross profit. By comparing the sales and cost of sales, we will calculate the gross profit. That is done through the trading account. And other than the sales, the business may have several other income. Right? So what are these other income? Interest income, rent income, dividend, profits, discounts. So we consider all these other income. And when it comes to expenses are divided into 4 types. Administration, which is related to the office related expenses inside the office. Examples: paying salary, paying rent, electricity, water, stationery, right, printing. So all these are admin. And we have selling and distribution, to sell or to distribute the products. Advertising cost, we have bad debt, commission paid to salesman, right? Any rent paid to the showroom, distribution, like your stock you deliver to the customer, delivery charge. We call it carriage outwards. So those expenses are called selling and distribution expenses. Then the third expense type is called finance expenses. Anything related to the bank charges. So all these are finance expenses. And the fourth type is called the other expenses, especially the damages. Those are not recurring expenses. Those are called extraordinary expenses. Donation, tax, right? So that's how we divide the expenses. Okay, so remember, income, sales income and other income, expenses, cost of sales and expenses, right? So once you take all these things, you will prepare the income statement. Okay, now let me show the income statement. This is the format of income statement. Right? So first this part, and we continue. Since I have limited space, I put the expenses into the other side. Right? So sales minus sales return. Return inward is the net sales. Out of that, we deduct the cost of sales. How do you get the cost of sales? Opening stock plus purchases minus closing stock. This is cost of sales. So from the net sales, if you deduct the cost of sales, the answer will be gross profit. Then we add other income and deduct all the expenses. Expenses are divided into 4 types. administration, distribution, finance, other. So once you deduct all these expenses, the final answer will be the net profit. Final answer will be the net profit, right? Then this is income statement. We consider the income and expenses. Then we have the balance sheet. Right? This side I have taken the equity, means the capital, plus liabilities, and the right side have taken the assets. It has non-current assets and current assets. So this can be presented in two ways. One is vertical format, other one is horizontal format. Now here I have given the horizontal format. Later I will explain the vertical format as well. And so this is horizontal format. So see, capital, non-current liability, current liability total is 2000. The non-current asset and current asset total is 2000. So finally, your total equity plus liabilities should be equal to total uh, asset. So that's about the income statement and statement of financial position. Right. And let me explain another important part. It's a Did you all understand up to now? Is it clear? Any doubts? Any questions?
Right. So the next part we are going to discuss is accounting equation. Right. So example one. So let's do this example. Let's do this example. Example one. There are 10 transactions where we need to record these transactions in the accounting equation. Right. So 1st of January, buying the invested cash. Then the cash will increase by 100,000 and to increase the capital. Second January, purchase a motor vehicle means cash decrease 4,000 and motor vehicle increase by 40,000. Cash also has motor vehicle also has it. Jan- 1 can reduce by 30,000. Stock increase by 30. 4th January, also is 30,000. So 30,000 worth of stock we are and that will give you a profit of 20,000. Profit 20,000. 5th January, pay the bank loan. That means we get from the bank 60,000. Liability increase. Bank loan will increase by 6,000. Drawings means owner takes money from the business. Cash will minus 50,000. Capital will minus 2,000. 8th January. Interest income is will be cash 70,000. Interest income 70,000. All the income has to be capital. 9th January. Electricity cash minus 10,000. Capital minus 10th January. Additional debt. 80,000. Then you are calculating the total liability is 40,000. About assets and electricity will reduce the capital because it's an expense. You are paying. It's a payment. It will reduce the capital.
Expenses will reduce the capital. Income will increase the capital. This is 210. 200. Yes. So those are the numbers.
Is this clear? Right. So today we'll conclude from this. Okay. Write the answer. Next, in the next class, I will explain more on accounting equation and do another part. Is it clear? Atif, Prabhat, Mona Lisa means yeah. Okay. Sahan, Venush, do you understand the accounting introduction part and this example?
Yes, sir. What is the homework?
Sorry,
What is the homework? Do we have a question too?
I will share one question for you to do. Okay.
Okay, sir.
Yeah, I'll send in the WhatsApp.
Okay.
Any doubts? Okay, so if there is no questions, we will conclude the session. Next week, we'll do the rest. Okay, so take care and good night. Be safe. I'll see you next week.
So what is the time of the next class and the date?
Same time, same Friday. Friday evening.
So Friday 6 to 9 or 6 to 8?
We'll let you know.
Okay.
I'll send the time.
Okay.
Okay.
Thank you, sir.
Okay, welcome.